Hey everyone, welcome back to Fiscal Voyage. My name is Felix, and today's video we're gonna talk about a real estate investment trust, a REIT, and this REIT has a dividend yield of over 9%, and not only does it have a high dividend yield, but it's able to pay it out every quarter with a very nice payout ratio, good free cash flow, good undervaluation fundamentals, and we're gonna look at the technical analysis of this company to see if it's at support level and look at some other volumes, support levels, resistance, and things of that nature in the monthly and weekly charts as well as the daily charts. If you're new to the channel, make sure to hit that subscribe button, and if you enjoy the video, hit that like button for the YouTube algorithm. So let's get started. All right, so Omega Healthcare Investors Inc. Ticker symbol OHI. You can see here the stock is going for $29.25. And the most attractive thing about this company right now is the dividend yield at whopping 9.24%. This is actually going to be a little less, maybe 9.23 or 22 because it's up today. So this is a day behind from Seeking Alpha. Some other key metrics. Funds from operation forwards looking at $3.30, and they have a dividend rate of $2.68. So basically this means that the funds from operation covers the dividend. This is what you would like to see for a REIT, real estate investment trust company. You like to see their earnings, which is the funds from operation or free cash flow, to be higher than per share, higher than the dividend rate per share. It has a market cap of over $7 billion. And some of the things that I like about this company, we look at the fast graph, you can see here, earnings has been erratic. And you can see in 2018, earnings or funds from operation, and I'm looking at free cash flow here, dropped 18%. I prefer free cash flow when I'm evaluating REITs. You can also use funds from operation, but I prefer free cash flow. So we look at this at a higher, longer time period. At a longer time period, you can see Omega Healthcare Investors had a nice run in free cash flow. You can see here it went up 13%, 14%, 16%, double-digit rate for almost 6 years, 7 years, double-digit rate. But then it had a bump. In 2017, it dropped 4%, and in 2018, free cash flow dropped 18%. But then it picked up, modestly at 3%, and then 12% in 2020. And that's a big thing because that's, everyone knows that's the year of the pandemic, COVID. So they grew free cash flow over 12%. And the price hasn't really show that growth. You can see here in March, it got as low as $26.54 in March lows of 2020, the end of March. And it just got high as $38, but then came right back at $29. So you could basically almost get this stock in during the COVID time when everything was selling off. But not only has this stock, sold off into that $28, $29 range, earnings are growing. This year, 2021, analysts are expecting a 4% growth in earnings. But next year, negative 3%, and then another growth of 4%. So this is very, very nice. It is a slight drop here, but it covers. You see the free cash flows covering the dividend, $3.11, covering the $2.68. So that gives you a 9.24% dividend yield, and the blended adjusted funds from operation yield of over almost 11%. You like to see this at 8%, 7% or higher. So that's outstanding for a REIT. S&P credit rating of BBB minus, which is investment grade. Long-term debt to cap ratio looks good at only 56%. So overall, this looks real good. If we shorten this time period, you can see here from yesterday's close, and if it went to a PE or price to adjusted fund from operation of 15, you can see you have a 34% annual rate of return. This is with price appreciation as well as the dividend yield. And we're going to look at some of the metrics from Morningstar, as well as look at the technical analysis of the stock to see if this is a good support area or can it go lower. But you can see here right now you have a total annual rate of return potential of over 34%. And even if it doesn't do that and just stays flat, you're collecting 10% almost in the dividend yield, and a growing dividend yield at that. You can see here it's been growing dividends. It just stopped in 2021, so they're not expected to grow until 2023. That's what analysts are expecting. So we look at the Morningstar. Morningstar gives this stock a hold rating with a 3-star out of 5, but fair value at $32 with last close at 29. But right now it's a little higher. We go here 29.25. So it's slightly undervalued based on Morningstar. But if we go back to the fast graph, it does look undervalued because you can see it has a blended P to adjusted fund from operation of 9.10, where it should be a normal multiple is at 11. So it is undervalued based on the fast graph, undervalued based on the fair value price on Morningstar. Some of the key metrics that I like to look at here is the interest coverage, 2.9. That is lower than I like. The higher the number, the better it is. Debt to equity ratio is average at 1.3. The lower the number, the better it is. I like to see this under 1.5 and lower, but overall that's good there. If we look at some of the valuation right over here, you can see here, let's go over here, current. You can see price to sell is lower than the 5-year average, which is good. Price to earnings is lower than the 5-year average, which is good. Price to cash flow lower than the 5-year average, which is good. And price to book lower than the 5-year average, which is good as well. So that's all indicators of undervaluation. So that's the fundamentals of this stock. And you can see also, let's look here, looking for, you can see here revenue has been growing slightly at 0.88 billion, 93.89, so it's kind of flat, but trailing 12 months is up over 1 billion, or almost 1 billion. Net income, obviously they need to make a profit to pay out the dividend, so net income is growing. Last year it was down 0.16, or not down, but they only made 0.16 billion, and now trailing 12 months $0.44 billion. So growing in the versus 2020 for the past 12 months. And if we look at a technical analysis here, so this is the top left is the monthly chart of OHI, and the bottom left is the weekly chart of OHI. And I like to look at these two charts, the monthly and the weekly, for long-term investing, because each candlestick here represents 1 week in the bottom left, and each candlestick here represents a month. And these just two are your daily charts. So one of the big thing that I like to look at here is support levels. And you can see right in there at $28, $29 has tremendous support level. You can see over here, there was support over here at 28.20. Then, it dropped down and it got as low as what we got there, around $25. Then back here has support around $28.65, support here at 27, support here at $28.08, and then last week it gave us a bottoming tail at $27.98, and it came in with high volume. If you look at this thing right over here, this is the volume chart, and it's got as high as almost as the March lows. So that basically what volume means is sellers who are wanting to sell are getting out, and buyers who want to get in are getting in. So there's a lot of transactions happening here. So this may be the bottom of this extended move on the weekly. You can see here it's been on downtrend since July 26th. It's been a downtrend ever since, from what's this, $37, $38, all the way down, basically a $10 drop for the past few months. And it looks like it's ending right here with a nice bottoming tail on the weekly. If you look at the monthly as well, you can see a bottoming tail right there, high volume. The volume is right at the almost the top right there. You can see compared to the other months of volume, it's right up there at the high end. So that's another indicator that it may be turning around here. And if we look at the daily, you may possibly want to, for reinsurance, purchase share, like have a limit order to purchase shares at 29.70 cents, because there is a topping tail right here. So that means it went up there and the sellers push it back down. But if it gets over this, I think buyers would then become in control to take this higher. And then you can see here, this is why I look at the technical analysis of even dividend growth stocks. You can see here at around $40, this stock has very much trouble. Over here, it went past it and it got as high as $45. But over here, you can see it struggled over here at 39, over here at 39.18, over here at 39.24, over here at 39.31, and even back here in 2019 at $40.30 and 39.93 cents. So you can see that $40 range, even all the way back here, it stopped at $38. So that $38 or $40 is resistance level. So you could possibly buy this at around $30, maybe 39, what I said here, 39 or 29.70, and take it all the way back to around $38 to $40. That would be a good long-term play. And if it doesn't get to that level, you know, you're collecting a 9% dividend yield, so that's outstanding. So overall, I like this company. I own shares of this company. I'm down, not too much, but I actually have an alert at $25. If it gets to $25, that's what I'm going to be buying. But for those guys who are interested in buying shares of this company, this is a great opportunity right now to start a position there. Or if you have shares of this company and are, you know, in the $37 range, $40 range, this is a great opportunity to cost average down and collect a higher dividend. But me personally, I'm just going to hold my current shares and continue to collect dividends. But I do have this alert at $25.20. If it gets to that level, that's when I'll be buying shares, because that'll lower my cost average a lot less. I think I have around maybe like $31 or something like that. So buying now wouldn't significantly drop my cost average, but if I get it at $25, that's gonna drop it, you know, under possibly $28 or so, and collect, you know, even a bigger yield, 10-11%, who knows. But overall, I like this company. Solid investment grade, BBB minus. It's undervalued in both Morningstar and all the valuation metrics that we looked at. As you see, the technical analysis of it, looks real good. It's on support level right now. So overall, solid company. Let me know in the comments what you guys think of OHI, or what other REITs do you currently invest in, or what other REITs are you looking into purchasing more shares. If you're new to the channel, make sure you hit that subscribe button and like this video as well. And I'll see you guys in the next one.